Welcome to you both. Charlie, I don't know if you heard Larry Lindsey's comments a moment ago or would want to respond to the idea that it's doing more harm than good to keep the economy shut down right now.
You know, I've said that to you before, Kelly, and I have to be careful in saying that because we don't want to pretend to be medical experts. But there absolutely is a trade-off. Closing down the economy has huge negative impacts on the health of individuals. There's no study, there's no fact, there's no hypothesis that's more well documented that unemployment, negative economic effects cause depression, cause higher suicide rates. There are trade-offs here. And so I understand how government officials, in order to increase compliance with stay-at-home, want to say scary things. I get that. But at some point, we are going to have to reopen this economy. Well,
scary is certainly what we're seeing in the unemployment numbers right now. And I think what everyone's surprised by is that the layoffs were so bad last month in the survey week. And even if people were answering and sort of knew it had gotten worse by the time they answered the following week, you know what I'm saying? There's kind of this projection into the future effect. But the numbers, no matter how you slice them, Charlie, are pretty dismal. Where does that leave you when you try to figure out what to do with your clients' portfolios?
Yeah, so my view, Kelly, is that we are right now at peak bad news. The next 2 weeks are peak bad news. I've been invested in some health clubs, in restaurants and other institutions. They all let people go thinking it was better for them to put them on unemployment. They plan to hire those people back once they have the go-ahead to do so. So my opinion, you're going to see the numbers are going to be worse right now in terms of unemployment. But I think on this topic, we will actually see a V-shaped recovery with a lot of people being rehired after we get the okay.
Jamie, what's your point of view? Do you have to have a point of view on this in order to invest, or are there ways to kind of, position based on either value and some of the incredible price movements that we've seen, or on secular growth stories? Zoom comes to mind.
Yeah, there are so many things that are down, Kelly. I mean, if you look at energy, for example, I keep trying to ask myself, when is there going to be, if I'm going to buy an integrated oil company, when am I going to buy one if I can't buy it when there's an oil price war, which has cratered prices, combined with a 30% or more, demand destruction? So I think that, people could look at that and objectively say, you know what, maybe now it's time to nibble a little bit in a Royal Dutch Shell or an ExxonMobil or something like that, and take a position in a company that's well capitalized, one that it has plenty of interest coverage. These are the type of things that you try to do if you have some cash that you are trying to deploy. But a lot of people are doing other things that are more financial planning oriented, like doing Roth conversions, making alterations to their portfolios to try to take advantage of some of the declines in prices so they can, manage the recovery in a non-taxable account on the other side. I see a lot of that going on right now.
Yeah, Roth conversion could make a lot of sense right now. You also are looking at companies that might pay a similar dividend yield but have very different interest coverage. So Daimler, for example, pays out around the same as Ford, but has 14 times the interest coverage versus 2.5 times for Ford. Or Procter Gamble and Clorox both have a 2.5% dividend yield, but Procter has a 30 times interest covered. Clorox is 14. So in other words, you're saying we've heard this theme before. You can't really go sectors. You kind of have to go company by company.
Yeah, this is one of those times that stock picking does matter, and understanding the companies you own will pay off. I mean, the pair that you mentioned a minute ago, Procter and Clorox, maybe have reversed a little bit because of the circumstances that we're in. But if you take a look at maybe a longer term view and not look at it as a sanitation play, Procter & Gamble is a better company to own, and you can pick it up at a discount relative to Clorox. So I think that's kind of what a lot of investors need to be doing and concentrating on, rather than concentrating on data that we know are bad and we know are going to get a little bit worse until the only data point that matters changes. And that's when the number of people in the country are no longer dying, or we hit that crest in coronavirus deaths. And that's going to make a huge difference to everything, whether we restart back, when people are, it's going to make a huge difference. But all these data that we see right now are horrible. But looking through it, that's why you have to pay attention to these metrics and buy these companies when on one-off instead of just buying in the sector.
Charlie, quick final word. I know you like Zimmer Biohealth.
We're trying to find companies that are going to be fine, that are going to have pent-up demand. Zimmer is a name we love. They have replaceable hips and knees. People are clearly not doing that kind of elective surgery today. Their business is going to be down, but those surgeries are being put off, not canceled. They're going to happen. Zimmer is very well positioned long term.
All right. Charles Bobrinskoy, Jamie Cox, thank you this afternoon. We appreciate it.